The Federation of Kenyan Employers, FKE, is warning the government against continuously raiding the payslips of employed Kenyans to raise more revenue to fund expenditure. FKE warns that this could lead to social unrest as more salaried Kenyans feel disgruntled under mounting pressure to sustain their livelihoods with reducing take-home pay. Jimmy Mbogo reports on the situation, which the employers say needs urgent intervention to avert plunging the country into unrest.
The effect of the Kenya Kwanza administration's continuous raid on payslips of Kenyans are likely to catch up with the government, with employers now warning that Kenyans' take-home pay has reduced below the recommended 1/3. According to the Federation of Kenyan Employers, FKE, since the introduction of new taxes and deductions, employers are finding it difficult to comply with the rule, with some deducting more than the requirement by law. A scenario that is sending jitters across boardrooms as employees become disgruntled. The Federation now worrying that any further attempt to touch the payslip may have dire consequences.
Clearly, if we continue raiding the payslip, it means people will not have any income to take home. So what will they do? They'll have to keep borrowing. They'll be distressed. That eventually translates into social unrest. And then people begin to wonder what is the value of being in employment. In our calculations, about 45 to 50% of employees' incomes are going to tax, to deductions.
The employers further revealing that under the current administration, since 2022, close to 6,000 people have lost their jobs, with at least 57 companies announcing redundancies.
In 2024, we had 20 companies declaring redundancies. In 2026, it was 11, and in 2022, the remaining. Out of this, from our membership, some 5,500 employees were affected, specifically 5,567. But this is just a small indication because, you know, these are the numbers we get.
Additionally, the failure by both the county and national governments to meet their financial obligation to companies has forced them to cut down their workforce to reduce overheads, with pending bills now crossing the 1 trillion shillings mark, an issue that is causing further distress to both the employer and their employees.
Overall, the pending bills are over 1.0 trillion. That's a lot of money that is owed either to people who've rendered services to the county government, to the public, to state corporations as well. And we have been urging that these pending bills should be paid.
Despite the challenges, FKE is optimistic that 2025 could mark the beginning of the economic stabilization, provided key policy adjustments are made to address the tax and regulatory pressures currently burdening businesses and employees. The Federation has also called on government to enhance fiscal responsibility, reform tax policy, formalize the informal sector, and strengthen labor laws to raise more revenue.
The employers are cautioning the government against targeting the payslip anymore, noting that Kenyans do not have the capacity to sustain additional deductions on their salaries. Jimmy Mbogo, Citizen TV, Nairobi.